when I lean up, it's blocked. I gotta lean back.
Let's talk about mandibles. Still haven't read it. Feel like I have.
Drink.
Are we? Is it bad to anchor what we think is going to happen to this book?
What do you mean anchor?
Like every time something bad happens, like mandibles.
Mandibles, yeah.
What's the optimistic view of the future?
Well, Mandibles got something wrong. They thought Bitcoin failed.
Yes.
Or she thought Bitcoin failed. But I mean, she wrote it in 2015, 2016. It's kind of definitely more reasonable back then to think Bitcoin would fail. I mean, we were in a multi-year bear market.
Yeah, Lord Ashdrake was saying we were going to zero.
I've been trying to get her on Dispatch. I want to know what she thinks about it now.
Do you have contact or?
No, she's a really hard woman to reach. I have so many freaks that are like, oh, you got to get her on the pod. It's like, yeah, thank you.
I've been trying.
So any freaks out there, if you have a connection to, I don't know how to pronounce her name. I'm like fucked if I pronounce
Lenore, right? Lenore.
It's Lionel Shriver or Shriver.
Oh, Lionel.
Or Lionel is when it's female. Is it pronounced differently?
You're gonna have to meet her and ask her how it's pronounced because I'm not
know.
here. I'm not gonna be able to help you here.
If you have a connection to the author of the Mandibles, I would love that. But I mean, as far as I'm concerned, depending on your perspective, our real life is either a spoiler for the book or the book is a spoiler for our real life.
Or our real life is a different timeline on the book. We're gonna get through.
And the other, like, if you prefer nonfiction, you can read When Money Dies instead. She basically took that and made a future fiction book out of it.
Wait, no, Adam Ferguson didn't die. It was the other guy, Neil Ferguson, or whatever, died.
What, the author of When Money Dies?
Yeah, it was another author that died, I think.
But yeah, she basically she took it and made it easily digestible, near-term fiction. It's just a very easy read. I wouldn't go so far as to say a fun read, but it's in that category.
It's a page turner.
It's a page turner. Well, the middle is actually like kind of boring and drawn out, but that's kind of how I expect it to unfold anyway.
A lot of character development in the middle of the book.
No, it's just like people getting ground to a pulp, you know? The slow grind. That is very common in failing societies.
Yes. There's a lot going on right now. We got a lot to talk about. I added one thing to the list.
That was one thing that, sorry to cut you off, Marty, that 2020 kind of showed me. I guess I would say I've always had, maybe prepper tendencies, pre-Bitcoin, just my whole life. I mean, the freaks paid attention during our 2020 rips. That was obviously apparent. But a lot of that revolved around, go bags and being ready to move really quickly. But 2020, I mean, it turned out that it wasn't a deadly pandemic that we thought it was going to be. But in the beginning, in like February 2020, January, March, when we were paying attention to it and we saw those like random videos of Chinese men just like dropping dead in the street, and everyone in our circles kind of was really concerned about it. And then we ended up, flipping before everyone else did, as the pandemic actually went on. The point I was trying to make is, you think for most of these situations, it's going to be super quick and you won't have any time to react. And you shouldn't assume you will have time to react. But there was plenty of time to react in the 2020 crisis. We were like stocking up on masks, meat, like all this shit, getting out of New York City. And then like the lockdown started. Then, Whole Foods was out of things on their shelves. So I think a lot of these crises happen both quicker and slower than you'd expect, which isn't really a helpful comment, actually, now that I say it out loud. But
well, here's a helpful comment for people's mental health. Things are never going to be as good as you think they are, and never going to be as bad as you think they are. So for the theme of this podcast over the last few months as we've had all these crazy things in the geopolitical and macroeconomic environment. It does seem pretty bad, but maybe it won't be as bad as we all think. It won't be mandibles bad, I don't think.
It's Marty is both bearish on Bitcoin and too bullish on.
I'm bullish on humanity. I'm always going to be bullish on humanity. We're going to get through this, freaks.
Well, I sent that tweet out December 2019. That was my cursed tweet. So
the cursed tweet.
I'm not going to say it again.
I'm bullish on humanity. I'm not afraid.
No, I mean I am bullish on humanity long term.
Yes. And guess what? Speaking of bullish,
you can't build a house of cards and expect it not to fall at some point, and not for it to have devastating consequences. Like you need there, it could be not as devastating because we have tools that allow us to kind of soften the fall. But I mean, people are already in really bad shape, and we haven't really seen anything yet.
No, but like you said, house of cards. People are slowly reshuffling their personal boards. Hopefully it replaces some of those weak card foundations with stronger pillar-like foundations for the individuals who listen to the show and many who don't. I think people are starting to prepare.
Mandibles.
Bullish on humanity, bullish on Bitcoin this week. Going to Clark's dashboard, we're sitting at 20,610 cuck bucks. One cuck buck is going to get you 4,852 sats. Sats per cuck buck number go down this week, which you like to see, or maybe you don't like to see because you want more sats. But we're at block height 760,543. We are currently 1,505 blocks away from the next difficulty adjustment, which is estimated to be on November 6th, which will be next Sunday, I believe. And as of right now, it's estimated to be negative 4.8%. Downward difficulty adjustment, blocks been coming at 10 minutes and 29 seconds on average. We had a difficulty adjustment between RIP 223 and this RIP 224, and that was an upward adjustment of 3.4%. Hash price temporarily fell around 6 cents, maybe below 6 cents, depending on your calculations. There is
no floor. You see, Luxor Research posted a research paper on if there's a hash price floor or not.
Yes, Ethan Barra was pumping that.
And the TLDR is there is no floor.
There is no floor. So it could go negative. It can't go negative, but...
No, it can't go negative.
The floor is zero.
So
there is a floor.
It's the zero. Floor is zero, which doesn't really count as a floor.
That's a pit. There are currently 8,550 or 71, 8,580 transactions at Clark's mempool right now. It's been 9 minutes and 56 seconds since the last block, so this is going to contribute to the downward difficulty adjustment, this block at least. There are currently 5,609.98 Bitcoin in unspent capacity on Samurai's Whirlpool. I think that might be an all-time high on this show. I checked it earlier this week. It was above 5,600. Checked it yesterday. It was below. Now it's back above. Currently, that is 115.7 million cuck bucks in unspent value. That is the state of the Bitcoin network metrics that we follow here at Rabbit Hole Recap.
You reminded me, a freak tweeted out that I FOMO'd him into opening a bunch of Lightning channels in 2019 because I thought fee pressure was going to be sustained and high. And I just wanted to say, I'm sorry to all the freaks. I played myself as well. Cost me a lot of time and money.
Things are never going to be as good as you think they are. They're never going to be as bad as you think they are.
Marty, it won't be mandibles bad quote is going to age like peak Clown World. You haven't even read mandibles yet. You've gotten the...
I feel like I've read it. Speaking of Reddit, what do you think of their NFT launch?
It's been massively successful because they don't call them NFTs.
What do they call them? Digital assets or something like that?
Collectibles, I think.
Collectibles. Interesting. All
I
right,
don't know. I don't really think much of it, but people were talking about it on the Twitter.
yeah. Yeah.
I don't think much of Reddit these days in general. I thought they were kind of a failed company and they lost their mojo after the sale to whatever that large media company was.
They sold
For
out?
not that much money, man. I like looked it up. I think he sold it for $10 million. Like right before all the other social media platforms started raising like ridiculous valuations.
Who did
But
they
yeah,
sell to?
I mean, I'm not going to give them props on launching a successful NFT platform, but they can figure out a way to.
Condé Nast,
Yeah, Condé Nast. There you go.
10 million, less than a year after launch. Wow, talk about fucking up.
No, I mean he's fine. He married rich.
Yeah, he's married to Serena Williams.
He's killing it.
She's a beast, man. What a career. What a life. All right, let's get on to the list. Core Scientific, some would argue, is the biggest miner in the world.
They're at least the biggest. They're definitely the biggest publicly traded miner in the world.
Is Genesis public? No, Genesis isn't public yet, are they?
I don't know. No, they're not. I don't think they are.
I think Genesis may be the biggest miner in the world. I think they're still private, core size. The biggest publicly traded miner in the world. And it seems like they're approaching bankruptcy. They announced earlier this week that they're going to stop paying off their debt payments because of the cash crunch that they're under. This comes on the heel of last week announcing that they're raising their hosting rates for people that are hosting with them to around 10 cents. I think it was just below 10 cents. For those who are unaware, Core Scientific has a blended strategy of prop mining. I believe they have like 102,000 or 130,000 miners that they own and operate themselves. And then they have another 100-odd thousand ASICs that they're hosting on behalf of other miners in the world. So with their business, they set up these PPAs for their prop mining operation. They probably just mine at cost with the PPA, and then with the hosted services that they provide, they upcharge those individuals on their electricity rates, and so that's how they get their margin. Seems like margins were pretty thin. They raised it to 10 cents a kilowatt hour for their hosting clients, and I wrote a bet on Monday. If you went to insights.braiins.com and looked at the profitability calculator for each individual ASICs, the only customers mining at Core Scientific at a 10 cent per kilowatt hour rate that were profitable were the S19 XP and the S19 Pro running Braiins. The S19 Pro with stock firmware was unprofitable. So you have to imagine that everybody...
Yeah, to have literally the latest generation.
And I would imagine very few
of those are
because CoreSci themselves, they got an XP delivery and they just started plugging those in July.
So they raised their hosting costs, and that made pretty much every customer unprofitable.
Yep.
Is the TLDR. Logan, can you open the next link on our list? Scroll down. It should show a bar chart of the publicly traded miners. Keep going. This one.
Zoom in.
Yes. This is is showing all the publicly traded miners hash rate, and CoreSci is just way ahead of everyone else. They're at 4.5% of total global hash rate.
5% almost.
Oh, 5%. Yeah. And then the next one after that is Marathon at 2.2%. So CoreSci is a juggernaut. They do seem like they're on the brink of bankruptcy. How does this affect Bitcoin? Well, first of all, they sold pretty much all their Bitcoin following the 3 Arrows Capital induced crisis where the price fell so much. So I think they only have 24 Bitcoin left. Is what the most recent filing said. Um, I mean, we shouldn't really expect much sell pressure. I mean, 24 Bitcoin gets absorbed super easily. Um, but on the miner side, if they start selling ASICs, that depressed hash price is only going to get worse.
Yes, worse or better depending on which side of the market you're looking to be on. There's a lot of people.
Well, if you're buying hash, right? Yeah, if you're buying hash, it'll be good for you. But if you're sitting on a lot of hash, it's going to hurt your profitability.
Well, it won't hurt your profitability if your miners are plugged
Value
in.
of the ASICs. It'll hurt
Yeah,
the value of the ASICs.
it'll hurt your balance sheet if you're mark to market
Yeah.
with your ASIC.
Yeah, because these miners are already mining. These ASICs are already hashing.
Yeah, so this will be very interesting to see. As we see, the top two miners here, Core at 4.9% of overall hash rate, and then Marathon at 2.2%. Obviously, Core is going. It seems like they're approaching bankruptcy. I saw a tweet earlier today that they're considering it. Nothing has been filed yet, but they announced that they're going to stop paying their debt payments, and anybody with any sensibility would logically conclude that bankruptcy is the next step. So that's the big question that looms here. Core Scientific has a bunch of operations spread throughout the United States. What happens to those operations if Core Sci slips into bankruptcy? Do creditors force them to keep the machines on and get as much revenue as possible? Is that even a viable plan, considering the utilities companies that they had to pay, or the utilities companies just going to kick them out because they're not able to pay their bills month in and month out? And then what does that mean for hash rate as we move forward throughout the rest of this year into Q1 2023? I would imagine that in at least some of their locations, the utility provider is going to be like, "Hey, you're not paying your bills. We're gonna need you to turn your ASICs off and leave." And so that would be good for miners that are plugged in, because hash rate would fall, difficulty would fall, and those miners would become more profitable. Again, and then number two, Marathon at 2.2%. They were heavily dependent on Compute North, which filed for bankruptcy last month. And so do we have a situation in which the two largest miners are forced to shut down a massive amount of their hash rate, and which would benefit the rest of the mining industry who are able to continue running their ASICs?
Oh yeah, so we could see difficulty drops, which would increase profitability short term for other miners.
Yes.
Presumably, all those ASICs will come back online, whether it's Core Sci doing it or
Yeah, well, it'll take some time though.
bankruptcy, or if it's
Well, that's the thing with these. I think that's
state.
the big unknown with these bankruptcy proceedings. Obviously, again, Compute North was the first to fall last month, and now it seems like Core Sci is approaching bankruptcy. I don't think there's been much clarity into exactly what's happening with Compute North's operations. I think they're keeping their ASICs hashing as of right now, but when you go into bankruptcy and you have all these creditors laying claims to the assets of these companies, the main asset being the ASICs, what happens with that? Do they keep them plugged in while the creditors try to figure out who gets what, or do they get unplugged, sent to a warehouse, and then the bankruptcy proceedings follow, and not until they are finished do we figure out what happens with those ASICs? I guess that's the big question in the room right now. So there is a path or scenario in which these ASICs could be warehoused and left off the market for a considerable amount of time, because I'm not sure what the average length of a bankruptcy proceeding is.
Yeah, I'm not going to pretend to be like familiar with bankruptcy law or processes. I assume it's a very cumbersome, horrible process.
I don't think it's going to be a quick process either.
I mean, that I had Logan pull up second was the next item on our list, which was Luxor again, and they were saying that publicly traded miners are 25% of global hash rate, which should be a troubling figure for people, I think, because those miners are also the most likely to get regulated and, you know, bend the knee to regulators in terms of protocol level censorship risk. We don't want to see that number get too high, but maybe the trouble that we're seeing at Corsair is more indicative of the rest of the publicly traded miners as well, and that number will fall, but we'll see.
Yeah, we shall see. But again, nuance here with Corsair going back to their business model being 60%, around 60% prop mining, 40% hosted. So that 40%, so around 2.2% of overall network hash rate are private miners just hosting with Corsair. So they can hypothetically take their ASICs elsewhere.
There's a lot of friction involved with that.
Yes. But that is a scenario. And then again with Marathon, what I'm interested with Marathon is that 2.2% number, their potential hash rate or their actual hash rate that's live, because it's pretty well known that Marathon has bought a lot of ASICs and tens of thousands are sitting in warehouses not yet plugged in. So is that hash rate that's not plugged in calculated into that 2.2%?
Yeah, I don't know what their methodology is, but in general, that number is way too high. I mean, it's not way too high. I mean, it's an open market. Anyone can do whatever the fuck they want. And I think we should assume that we're going to see more and more of that tendency, these large publicly traded miners. I do think long term, and I've echoed this many times, that I think as Bitcoin uses more energy, there's a natural diseconomies of scale where it's harder to get cheap energy at large volumes, and that should benefit the distribution of hash rate. Like hash rate should distribute long term. I think the incentives are there. It's more of a short term to medium term risk, and I would add that maybe maybe that 25% number is more illustrative than should be treated as like a hard number. But we have former ride or die free Carlos in the comments, who did mention, and he's got a good point there, that publicly traded miners aren't the only ones that will bend the knee to OFAC regs. We will see pretty much any large operation that's based in a Western country is more likely to do it. So just these large warehouse miners in general. So what we want to see is more off-grid miners. We want to see more small mining ops. We want to see people mining at home and using waste heat, where they have a major incentive. It's harder to capture waste heat and take advantage of it at scale. It's easier to do that in smaller situations. So we want to see more of that, less of the warehouse miners. But at the end of the day, it's an open market, and if Bitcoin can't withstand that, then we have bigger problems on our hands.
Agreed. Just want to pull up Corsair's stock chart today. Not looking good. Down 72%.
You have 5-day. Click 1 day. It's the same, I think, right?
Yeah. I mean, well, no, it's even more.
Oh no, because of it's like pre-market stuff, right?
Yes.
It's when the elites get to trade before all the plebs get to trade, so they got to dump it before the markets even opened.
Yeah, it was down like 82%.
How's that for equality?
Yeah,
that's crazy. 75% drop day over day.
Yeah, it went from over $1 to 26 cents.
All in non-open hours. It's just open, 75% down.
Yeah.
Fuck, man, don't buy mining stocks. Just stay humble, stack sats, freaks, or mine yourself.
If you've got low electricity right now, you're mining profitably. It's gonna. I feel like the next few months are gonna be good for you. I feel like we're gonna have pretty big downward difficulty adjustments with all this shit.
Yeah, I mean, we said it like a month ago, maybe longer, but I feel like this period, who knows where the bottom is, but this period, this like 8-month period, will probably be a very good spot for especially smaller scale miners with low energy costs coming in, buying cheap ASICs. And they'll probably have really, really long runtime on those ASICs in terms of profitability.
Yeah. Yeah, it's going to be a great time to scoop up ASICs over the next few months. Logan, pull up that tweet I just put in there. Going back to
Do you
Matt.
think the ASIC bottom's in yet, Marty?
No, definitely not.
Yeah, neither do I.
No, this is going back to Matt's point of using the waste heat. This was a pretty cool thing that came out a couple weeks ago that we haven't shared yet, which is this hotel, a 40-room hotel, is using ASICs to warm the building in the winter. And so this just shows the ingenuity that is happening in the mining industry. This seems like a very legit setup.
Yeah, it's super clean.
Yeah.
Very professional. I mean, do you agree with me that when it comes to capturing waste heat, there's a diseconomy of scale, right? Like it's naturally incentivizes the smaller operations.
Yes. Yeah.
Yeah.
I mean, because you have physical limitations in the buildings where you're.
Yeah, I mean, you can like capture. We've seen like warehouse style miners in, I think in Norway and stuff, like dry large amounts of produce.
Yeah, there's
It's
that famous
more.
one in Canada that's creating salt using the waste heat.
It's definitely more difficult than a boiler in a building heating all the apartments or hotel rooms with the
Yeah.
waste heat.
Yeah, that's going to be a very exciting trend to see in the coming years is that type of model become productized. And you just think, because I remember like in the COVID aftermath, when everybody left FiDi specifically, you had all these massive commercial real estate buildings with a bunch of office space completely empty. I had somebody call me because they have in FiDi has its own substations like specific to that area of the city. And some of the people in the large buildings down there reached out to see if they could set up ASIC operations to make some money while everybody was leaving their buildings. And so you can imagine a future in which that becomes very productized and it just becomes part of the suite of services offered by these HVAC companies.
Well, I mean, I think if you go to Home Depot in 10 years, most of the boilers will have built-in ASICs.
Yeah.
Even if you're just like buying a retail boiler.
Yeah.
But maybe I'm too bullish.
No, I mean, it makes sense. So you get to subsidize your heating cost.
Yeah, and you're already doing it. You're already heating.
Yeah.
In cold areas, at least. But you have to heat hot water regardless.
Yeah. Yeah, just for hot water alone in buildings. It's going to happen. Again, I'm bullish. I'm bullish on ASIC ownership distribution and physical geographic distribution of hash rate. And again, going back
But anyway, to the new freaks, this every bear cycle, there are miners that didn't stay humble. They get wrecked. Consolidation happens in the mining industry. The survivors thrive the next cycle. This one's a little bit more extreme because there was so much debt taken out in the public markets, but also just in general with ASIC-backed loans that never really existed in previous cycles. But what we're seeing is very similar to previous cycles, I would say.
Yeah, that's a good point to bring up too, is the main financing vehicles for miners throughout this last cycle has been, if you're a publicly traded company, offering equity, diluting your shareholders to get cash to fund expansion, which Riot has been taking advantage of. And then the other facet was debt, typical debt financing, which was available to people like Core Scientific. And then the riskier type of financing was this ASIC collateralized lending where you put your ASICs up as collateral. And that's turned out to be a terrible strategy because the price of the collateral, the ASICs, has been falling significantly with the price of Bitcoin over the last year. And so you find people in a situation where their collateral value is significantly lower than when they entered the loan. And so they're forced to sell their Bitcoin and scramble to service that debt. And so that will be a trend, I believe, into the next cycle that you guys should be paying attention to, which is a third way to finance your operations, which is these hash rate derivatives products that are starting to come to market. We've had Matt Williams from Luxor on a couple of weeks ago detailing their cash settled non-deliverable forward contract. There will be other types of these derivatives, these forward contracts. And a forward contract is essentially, in the mining space, you get cash from an institution or a bank that's looking to get hash rate exposure, and you get cash up front, and then you deliver hash rate either in a cash settled fashion or physical fashion in the future. And so that allows you to hedge out your future revenues and get cash right away to either just bolster your balance sheet or expand. And so I think that will be a very positive trend as we head into this next cycle, is publicly traded miners or even privately traded miners won't be forced to dilute themselves by offering equity. They won't have to go into insane amounts of debt with these ASIC collateralized loans or typical debt financing. They will have a third option, which is hedging out their hash rate for cash, which will be very beneficial to the market overall and hopefully lead to less volatility moving forward.
Correct me if I'm wrong. I mean, miners have already had the ability to easily hedge price risk.
Yes.
This allows them to hedge essentially difficulty risk and price risk in the same product.
Yes. So hedging price risk,
you just go short.
But you're not really able to. You're not really able to lock in any cash on the get-go, where these hash rate derivatives allow you to give up future hash rate for cash right away, which is
you get paid up front.
Yeah.
And you had price and difficulty at the same time in the same product.
Yeah. And so
yeah, that makes sense to me.
Worst case scenario, you lock in some cash and maybe difficulty goes down over the duration of your contract and you don't get as much revenue as you would have, but
you get to choose your risk reward balance more precisely.
Yes.
So and yeah, go on.
I was going to say, I just think these markets are going to mature. They're desperately needed. And yeah, I think the big lesson of this cycle is ASIC collateralized debt is very risky.
Do you think we'll ever see the so like in the beginning there'll be an obviously useful tool to miners. Maybe I'm jaded in my lifetime and what I've seen in traditional financial markets. Do you think we're going to end up in a situation where there's just going to be like derivatives on derivatives on derivatives and just crazy house of cards is like built up on top of all those contracts?
It depends on how the base derivative, maybe I'm talking out of my ass, but I would imagine it depends on how the base derivative is structured. Like, do you need to put Bitcoin up as collateral within that product at the beginning? And then can you actually, like, would any derivative on top of that have claim to the underlying collateral of the base derivative? And if not, is that too risky to even make sense?
My guess is like people are going to get blown the fuck up, and because there's going to be just a bunch of like derivatives and shit laid on top of it. Like the Bitcoin protocol will be fine. Regular Bitcoiners will be fine, but yeah, I find it hard to believe that there won't be a whole mess just built on top, just because that's just the nature of how these things tend to.
Yeah, but I would imagine that would be further down the road, because first you have these cash settled, physically settled forwards contracts, then you have pure difficulty derivatives, then you have fee derivatives. You can even like try to hedge out fee market risk and then even variance risk. So
yeah, but then in like 10 years you have like retail is being sold like a 3x inverse. Yeah. And then like, what the fuck's going on?
That's a good question. We'll see. Like, I mean, this goes into like the hypothetical of like, is hyper Bitcoinization real? Do we transition to a Bitcoin standard? And under a Bitcoin standard, does that type of risk appetite even exist? Do people want that?
Yeah, dude. Yeah. People are going to want to gamble. This is what also people don't like. I've said time and time again, like if you think like shitcoins are just going to disappear, they're not going to disappear. Like people like to gamble. Different shitcoins will disappear and just fall into irrelevance, but there'll be new ones and there'll be new ways for people to lose all their Bitcoin. But people love to gamble. It is a natural human tendency.
I'm very happy I never got the gambling bug because I do have somewhat of an addictive personality.
If I didn't have the gambling bug, I wouldn't have gotten into Bitcoin when I got into Bitcoin. So I'm grateful for it in that regard, and I'm not grateful for it in terms of the amount of Bitcoin I've lost. Carlos made a good point. Yes, you can capture waste heat with just a traditional air cooled system. Especially if you have one of these older houses that has central air that runs through the whole house, you put a filter on, you duct it right in there. Um, you might have some noise issues. There's ways to mitigate that, but there are people doing that where they just like duct it right into their central system.
Yeah. I mean, I could see the black box iterating and figuring out a way to reduce the sound while being able to utilize the waste heat as well.
Yeah. I'm just thinking there's like no way to, I guess there's, with the black box, there is already a sound dampening aspect, even if you duct out from there.
Beware, freaks,
Definitely
beware.
on that shit though.
Chaos in the mining industry. Corsair approaching bankruptcy. I'm hearing rumblings of other publicly traded
Yeah,
miners.
this is not the end
No.
on the mining wreck news cycle.
Yeah, I would imagine there will be at least one or two more publicly traded miners that have to file for bankruptcy in the next couple of months. So be on the lookout for that. Next on the list, Cashapp adds Lightning Receive support. This was a big theme this week. If you're a Cashapp user, to date with their Lightning integration, you've only been able to send from the app and pay invoices, and now you can receive to your cash tag, your Cashapp account over the Lightning network. Pretty seamless UX. I sent Miles some sats over the Lightning network, and it's pretty cool. The UX.
So not only did they add receive support, but they also integrated BIP21, which is this idea of a unified backwards compatible QR code. So you get a single QR code, and when you scan it, if it's an older wallet that doesn't know what Lightning is, it can just pay on chain. If it's a newer wallet that doesn't know what Lightning is, it can just pay on chain. And if it's a Lightning wallet, it can pay via Lightning. So it's a backwards compatible unified QR code for all your Bitcoin receives. And it's been something that they've been championing behind the scenes and also in front of the scenes for a bit. But now they've actually integrated it along with the Lightning receive support.
Yeah. I'm a big Bit21 fan. I mean, from a UX perspective, it makes a lot of sense. You just point and it discerns what you're sending from, and you don't have to think.
Yeah, I mean, I don't know if I'm necessarily sold on the receive side, but it makes sense to me. I definitely agree with what they did on the send side, which is what Moon has done, which is you just pull up the QR scanner and the wallet just figures out if it's a Lightning invoice or on chain. That seems like a very obvious win. On the receive side, what I don't necessarily like about it is, what if the person doesn't want to send on chain and they don't really realize what they're doing, or vice versa. But maybe that's just a power user thing, and power users will be fine with it. And most people just want to send Bitcoin and they don't really care how they send it.
Yeah.
But yeah, I mean, it's cool seeing the unified QR code. It's great seeing finally having received support. I would like to see an actual like tipping page like Strike has, where you can go to like strike.me/MartyBent and it just pops up a QR code regardless if you have an account. They do have a link feature for receiving, but it's like a one-time use link. It's not like you can just go to cashapp.com/Marty and just send Lightning. I assume that's coming. They do have like cashapp.com/Marty, and it'll let you pay them via Cash App.
Yes.
So I assume they're thinking about opening that up. On the next link, Logan, I have a link to one of Cashapp's nodes, which brings me to my next point, which is something that I tweeted out about today, which we've talked about on the show many times, but seems
Go
like
down further, Logan.
people don't really talk
Here.
about it, which is when I think about the Lightning Network, there is no one Lightning Network. Lightning Network is a group of it's an open protocol where you can have payment channels between different peers. Now, people like to think of Lightning Network as one big interconnected network where you can send to any peer on the network. And so far, it's been pretty well connected. But when I think about the Lightning Network, I tend to think about it as two different main use cases. And the main use cases is one is an interoperable protocol where regulated custodians can easily transfer Bitcoin between each other with very minimal trust. And then a sovereign Lightning Network that is mostly supported by individuals. And why do I say this? I say this because they're dramatically different use cases that have different trade-off balances that are necessary for them to be successful. On the regulated custodian side, there's pretty much there's very little need for easy self-hosting. There's very little need for operator privacy. There's very little need for necessarily transactional privacy. All of these things are secondary priorities on the regulated custodian side. And we've seen massive uptake, adoption, a lot of traction on that side. I'm pretty I expect volume adoption usage on that regulated custodian interoperability side to continue. Sending from Cashapp to Strike, or paying an open node merchant or an IBEX merchant from a Strike wallet or a Cashapp wallet. Now, on the sovereign side, I think the future is still unclear there. And why do I think the future is still unclear there? I think it's unclear because Lightning still lacks strong privacy guarantees. We're obviously making improvements on that side, but specifically for the operator of the node, being able to self-host a node in a potentially adversarial environment, not dox your IP address, not have to rely on a cloud server that can deny you access, has up until this point mostly relied on Tor, and Tor has been a complete failure recently.
Yeah,
it's a complete mess. So there's all massive reliability issues on Tor, and so right now these two kind of different main use cases for Lightning, the regulated custodial side and the sovereign side, are relatively well interconnected. There's channels between them, but I don't know if that's gonna continue if we keep seeing regulatory pressure, which is what we're seeing. We're seeing a lot of regulatory pressure. And so I had Logan pull up one of the Cashapp nodes. And what Cashapp does is they don't allow you to open a channel with them. They choose their channel partners. And if you look at the list of the channel partners, it's basically just OpenNode, OKCoin, and River on this specific node. So they've specifically only chose regulated partners. Now, in this case, River actually has a lot of channels open with the sovereign Lightning Network. So the fact, and I'm not sure what the case is with OpenNode, but I would imagine probably pretty similar. But I know for a fact that River has a lot of channels open with the sovereign Lightning Network. So Cash App users are still able to pay and receive from people on the sovereign Lightning Network. Now, the question is when their team of 500 lawyers, or however many fucking lawyers they have, decide further down the line about compliance, and if they decide and regulator pressure increases, they might choose to not have channels open with partners that have channels open with people they don't know. And we could see this bifurcation of the network. We could see a separation of the network. Now, what do we have on our side? We have on our side that there's a strong incentive to bridge those two distinct groups because you make routing fees. Like you actually make a financial gain there. But that being said, if there is regulated pressure, if there is overcompliance with that pressure combined, then maybe that financial incentive does not matter. Maybe the real financial incentive is that these operators don't want to end up in jail, and they just do not open with channels. They don't open with peers that they don't know that aren't regulated. So it's just something that should be on people's radar, but also it's something that you kind of need to conceptualize in your head. Otherwise, the different Lightning Network news and stuff that you hear, it's hard to really decipher because Some things are, very positive on the regulated custodian interoperable side. That is, either meaningless or negative for the sovereign side and vice versa. Well, maybe not even vice versa. I would say that anything that's a benefit for the sovereign side should really be a benefit for the regulated side, but not in the opposite scenario. So I just think it's an important thing to highlight that a lot of people aren't really talking about.
No, I was very happy to see you post that thread today because this is something that needs to be brought to the fore of the conversation, because you could easily see a situation where this bifurcation does materialize. And like you said, at the moment, due to some of Cashapp's counterparties being connected to the sovereign Lightning Network, you can send and pay their invoices at the moment, like I did, via the TFTC node, which I would consider a sovereign node. We're connected to a bunch of individuals, and I successfully had a payment routed to them. But like you said, the lawyers can get in the way and try to box their counterparties out of allowing that to happen.
Yeah, we'll see like a lot of deals where like people are like literally signing legal agreements between two partners where they're saying you can only open with other regulated nodes, stuff like that. And yes, like I want to be clear here. When I say two Lightning networks, like they're in practice, there's hundreds, thousands, all these different networks. Like me and Marty can just have a private channel or even a public channel just between the two of us on two nodes that are not connected to the rest of the network. We have our own little mini Lightning network. But I'm just saying conceptually, the way you can think of it, conceptually, I think it's a very practical way of thinking about it, is two main use case Lightning networks, right? One is on the regulated side, and then one is on the unregulated sovereign side. But really, in practice, it's many interconnected networks.
Yeah, it'll be very interesting to see if a trend begins to develop where, like, the overwhelming majority of Lightning Network activity actually emanates from nodes that are connected to each other between sovereign users in the West and services that are popping up in developing countries that really don't have strong regulatory environments, and they just leverage the open nature of the Lightning Network and let more and more people connect with them, which would be a bullish scenario. I could definitely see that materializing as well.
Yeah, I mean, there's going to be like different aspects to all these things. It's not like one of the cool parts. One of the difficulties with Lightning growth is that it's not this like centralized blockchain. But one of the benefits of it is that it's literally a permissionless protocol for payment channels on Bitcoin, for basically batch payments on Bitcoin. So like I said, like we could just open a channel, and what you will see, and we're already seeing this, is there are channels open between large entities that the wider Lightning Network just never is even aware of, that they're not even aware that exists. Nor like, but I also think like you got to separate that from, is Lightning adoption successful? Like, is, because that's, if River and Cashapp are transferring billions of dollars between each other, which they're not right now, but let's say they are in a hypothetical situation, and it's literally just going between their own private channels, and those nodes are disconnected from the network, the wider network. That's pretty much meaningless for everyone else, but it's useful for both of their businesses.
Yeah, and like, even with this Cash App example, like looking who they're connected to: River, OKCoin, OpenNode. That's it. Those three companies: River,
Yeah, they have more
OKCoin,
nodes
Open.
than that. This is one of their nodes, but just it's a
Yeah,
good example.
what sticks out to me though is that they don't have a connection to Bitfinex even. So maybe like even
Yep.
at that enterprise institutional level, they're beginning to pick and choose their counterparties. Obviously, Bitfinex has had a lot of regulatory and legal pressure on them over the years, and maybe Cash App is making a deliberate move not to connect with their nodes to avoid that.
That's what I'm hearing from the conversations I've had, the private conversations I've had. It's mostly compliance related, and they're very strict about it. It's very difficult to open channels with them, and they're very strict about who they do it with.
Yeah, so Bitfinex has two of the largest nodes on the network, and seeing that Cashapp isn't connected with them publicly, at least, is an interesting little data point there. With this one node, I haven't checked their other nodes, so maybe they are with other nodes, but I would imagine this is probably replicated.
I looked at two of the nodes, and they were pretty much the same breakdown.
Yeah. So be aware, freaks. Pay attention to that trend, and if you're a pleb Lightning Network router, keep on keeping on. We got to keep the sovereignty of parts of the Lightning Network topology intact.
Yeah, I mean, this is where I would say, this is why it's important that freaks run sovereign, Tor-only, self-hosted nodes. But I don't know if running Tor-only is a practical suggestion now.
It doesn't seem to be.
Because of the denial of service. I've been reluctant to switch my Citadel Dispatch node, my main routing node, over, mostly out of principle. But like most of my channels, it has like 200 channels. They're mostly offline right now during the denial. It's like switches which ones are online and which ones are offline. The reliability is fucking horrible. So there's ways around it. You can essentially run a proxy to a cloud server. So instead of running your node on the cloud server, which is, obviously that's an option, but it's a not your keys, not your coins type of situation. You are taking some risk having a hot wallet on a virtual private server, on a cloud server that can get taken down or compromised because you don't have physical control over it. Someone else has physical access to it. You can do a proxy where the IP address that is shown, your address on the internet, the address that is connected to your traffic is the cloud server. Then you connect to that. And so you are doxing yourself to the cloud server, but you don't have to deal with the Tor latency and you don't expose your IP address to everybody else. Now, that's not an ideal situation either. Some people are working on I2P support, which is a alternative to the Tor network. But in general, that's a major sore spot. Like we need to be at a place where people can relatively easily run a node at home without exposing their IP address and without having to rely on a cloud server somewhere. And we're just not there yet.
Yeah. Do you have? I mean, you never want to bank on like a magic moment where like Tor fixes their problems, but it does seem like there is a bit of urgency to fix the problems with Tor, with the incentivization of exit nodes and all that stuff. Is there, with this particular distributed denial of service attack, like, do you see, like, is there a point at which you get X amount of exit nodes that renders that attack moot? Or
so actually right now, like a lot of the issues is within the internal Tor network, within the onion services. So first of all, they don't have a dedicated team that works on onion services. It's amazing. Like you'd think they do. They don't. I actually was talking to the Tor team this week because a mutual friend put me in touch. They want to hire 2 developers to do that, and they're trying to work with some companies to fund them and hire 2 full-time developers to focus on that issue on onion services with the denial of service attack. So actually we need to see more relay nodes. I mean, it'd be great to see more exit nodes as well. Exit nodes allow Tor users to go to the wider internet, to the clear net, as a lot of people call it. But we need more relay nodes too. So, I hope that OpenSats will be a major aspect of Tor hiring these 2 people, and that's why I've been speaking to them. But it is good to see other Bitcoin companies step up. We've seen some Bitcoin companies step up. I can't talk about that publicly yet, besides what I just said. But then the other thing is something, well, if you're capable of running your own relay node, consider running a relay node. That does not come with the same risk that an exit node comes with. If you run an exit node, your ISP or internet service provider might blame you for internet traffic that comes out of there that is obviously not yours. It's a Tor user's. So if a Tor user goes through your exit node and goes to some kind of criminally attached website or something, some kind of criminal content, then you might get blamed for that. And we've seen that happen in some countries. But a relay node doesn't carry that risk. So if you can run a relay node, that'd be great. One of the a Bitcoin contributor, he contributes to a bunch of Bitcoin projects, including BTC Pay. Ricardo Masudi started a project called SaveTor.network. That's the website, SaveTor.network. It's essentially a BTC Pay server where if you send him Bitcoin, he will launch relay node. He'll launch relay nodes on the Tor network. So if you don't have the technical capability to run your own relay node, that's obviously would be best case scenario. You can actually send Bitcoin and he'll spin it up on a cloud server for you, and you can actually pick which cloud server you want it spun up. So if you want to support with Sats, that's a good way of doing it. But I think that's only a short to medium term fix. I just think the incentives, like the model of Tor, is just a broken model. I mean, we've been talking about this forever. I just don't. I don't think it's robust enough to handle, sophisticated actors attacking it nonstop.
Yeah. Yeah. The saga continues. We'll be here keeping you freaks abreast of it as the DDOS continues. Hopefully somebody creative out there thinks it's something that can fix the problem, but this is something to be aware of. There's an attack on privacy. And the fucked up part is this distributed denial of service attack on Tor is definitely coming from a government that doesn't want people surfing the web privately. So be aware. If we go back to the mempool.space, Logan, I just wanted to point this out because I just think it's fascinating. Go up to the chart. It's like you can see. It seems like you can see when Cashapp started at least testing their Lightning Network receive, like at the beginning of September. Just their channel management, how they're opening and closing channels. Imagine sweeping funds on chain and rebalancing. It'll be interesting to see these tendencies and maybe what you can try to glean from this data moving forward. Nothing really special here. I just thought it was interesting how you see that plateau.
To be clear, because this ties into our next story, that's not showing payments going through.
No, it's just channel management.
It's not showing the change in channel balances of within channels. It's showing channels being opened and closed, and the total capacity of those channels. So like if I open a channel to Marty and it's 2 million sats, via the gossip protocol of Lightning, if it's a public channel rather than a private / unannounced channel, I'm telling everyone that we have a 2 million sat channel. Now they don't know how much is on Marty's side versus how much is on my side unless they probe me, unless they send a bullshit payment through my node to probe me like Tony did. They don't know what my channel balance is. They don't know what that breakdown is, but they know what the total capacity is. And this is showing the total capacity. But I probably agree. I would agree with you that at least this is when they started doing active stuff where they were actually closing and opening, and rather than just like the straight lines.
Yeah. So some people have been testing this out for a couple months, or at least a month and a half. Just announced this week. But like Matt teased there, the next topic on the list is Amboss. They launched a controversial data sharing feature that threatens Lightning Network privacy. Essentially, they're allowing individual users to highlight their remote balances, which
highlight everything,
including the remote balances. But this puts their counterparties in their channels at risk and discloses information about them, which they may not want disclosed.
Right. Yeah. So, I mean, I set it up with the last conversation. So right now, publicly shared information is your total capacity. Now, with probing, you can determine the actual remote and local balance of a node. This is a probing is basically sending a bunch of fake payments that you know will fail through a bunch of nodes to determine this information. You can figure out the UTXOs attached to private channels. UTXOs attached to all channels. So the functionality, the ability, the capability was already there for malicious individuals. And Tony basically tested this out on my node. Not only could he find out my channel balances and the UTXOs attached to those channels, but he could also figure out, he could also actually just jam up my channels and stop me from sending or routing payments or receiving payments. He chose not to jam me, and I appreciate that, Tony. But any person who is operating a Lightning node, and we've talked about this on the past, should assume that their channel balances and their UTXOs that are in their node will be connected, and that this is public information, at least until changes happen on the Lightning Network. There's a bunch of work being done that will hopefully mitigate some of these things. But until then, you should operate under this assumption. Now, the concern here is Amboss is one of the largest Lightning analytics companies. It's a Lightning Explorer. You can go on it. You can buy liquidity. You can sell liquidity. You can learn all about nodes there. You can see their channel capacity. And now they're offering node operators the ability to report these balances live directly to them, on-chain balances and their remote versus local capacity of each individual channel. And it creates a centralized honeypot of very, very valuable data that can then be sold or compromised. Now, there's a strong monetary incentive to do this. We've talked about this in the past, that large routing nodes are going to monetize data. They're going to sell data. They're going to give data to regulators. Like, we should operate under all of these assumptions. That being said, Amboss and the team over there have always been pretty fantastic actors in the space. Like, they've been good contributors to Lightning. They seem like true Bitcoiners that are really in it for the freedom. And I think a lot of people are disappointed about this. So it should be interesting to see how they move forward from here on this particular subject. But I would reiterate that if it's not them, it's going to be someone else. And we should assume that all large routing nodes are logging information, are sharing information, are going to get compelled by regulators with a gun to their head to hand over this information. And we should try and make Lightning resilient to that. But particularly, to go back to our previous conversation, when you're talking about that risk is especially apparent in the regulated custodial interoperability network versus on the sovereign side. Like the very large node operators that have massive volumes, that are often run by regulated companies, like, you have to assume they're logging all that information. You have to assume they're logging memos of your different payments, like all of this stuff. They're logging all of this information. They're probably going to sell it to third parties, and they're almost definitely going to hand it over to governments when they're compelled to do it. So it's important to keep that in mind. In this particular situation, Marty said at another point, it doesn't just affect the node operator that decides to provide this information. It affects any payment that's routed through it, and it affects any channel peer that they have. So anyone who has a channel open with them, if they're not disclosing that information to Amboss, if their channel partner is, if the other node is, then they might as well be disclosing it. And there's a weird incentive here because Amboss has this liquidity marketplace where you can buy and sell liquidity, where I'm pretty sure that anyone who's selling liquidity is going to have a massive advantage if they're reporting this stuff. Because if you buy liquidity for someone, if I want inbound liquidity from Marty or zero fee routing, which is a major individual NIM run routing node that provides liquidity, I want to know that they actually have inbound liquidity to provide me. Like, if Marty sells me liquidity and I have inbound from Marty, and Marty's not connected to the rest of the network and no one else is giving him inbound liquidity, I just overpaid for his inbound liquidity. Like, I don't want to pay for that. That'd be ridiculous. So there's a strong incentive for people who are selling their liquidity, that are selling channels, to dox this information, and they probably will based on the financial incentive, and people that don't are going to be at a disadvantage. And we talk about incentives a lot. You don't want to see this incentive mismatch where a side that is essentially collecting data and sharing that data is at a stronger financial incentive than those that aren't.
Because if they share that data, they can essentially say, hey, I'm reliable. And people are more likely to buy their liquidity. Yeah, it's fucked. Here's, speaking of Tony Giorgio, here's his comments on the situation. We do so much to try to protect the privacy of the Lightning Network, but always going to be constantly fighting the tendencies for society to give away information for convenience. I can't begin to tell you how aggregating this information to a single party is an attack on Lightning and the privacy of all individuals as a whole. I knew this would be inevitable. There's an incentive for users to sell this data to any party and then for that party to sell this data to chain out analytics companies. This is just incentives catching up to the privacy flaws that exist. The only steps we can have is to yell out our concerns and point this shit out. I don't think Amboss is trying to be a bad actor, so all that's left is to educate and to try to get them to reverse this feature. I'll do some digging later, but it's a sad reality that someone would abuse this sooner rather than later. Just hate to see it, that it's them. But with that, talking about problems here, this is an obvious problem. How do we fix this? We got to test. We got to probe. We've got to highlight these pain points and find out where these exploits are and then code to fix these exploits. And that's actually something that Tony himself has built. LNsploit is a project that he announced at TabConf earlier this month, and this is just an initiative by Tony. If you go down a little bit, Logan, there you go. He's basically spinning up an attack as a service app to attack the Lightning Network, to highlight where all these privacy and potential bug shortcomings exist. So if you want to make the Lightning Network stronger, the only way to do that is to highlight where these inefficiencies and inadequate solutions exist and then figure out solutions. And the only way to figure out a solution is to identify the problem in the first place. And so shout out to Tony. I know it's probably scary for a lot of people operating Lightning nodes out there and providing services via the Lightning Network, but whatever, it needs to be done. So if you want to exploit the Lightning Network, Tony has spun up an app to help you do that. And the first demo he did was the BTCD LND bug at TabConf. He basically highlighted how you could steal funds from a channel counterparty using that exploit.
Yeah, so I mean, I love the work that Tony's doing. I appreciate him. This is what we've talked about in the past, which is Lightning hasn't really existed in an adversarial environment. As we see these types of attack vectors happen, hopefully we will actually see the tools improve and the protocol improve to make them harder to pull off, because we have to assume that any attack that's possible will happen, and anything that's financially incentivized will happen, and we need to make it robust against these scenarios. I've had Tony on Dispatch many times, but we talked about this specifically on episode 70. So if you search Citadel Dispatch in your podcast app, go to episode 70. Pretty much everything he said still exists today. It's the exact same situation. It was basically the pre-work that he did before LNsploit came out, which was he was manually just attacking nodes, including mine.
And then keeping on of this trend with solutions, another Austin Bitcoiner, somebody we've shoot on this podcast before, Ben the Carman, launched his Vortex service, which is a Lightning and Taproot enable collaborative transaction, which makes it easier for people to spin up channels using coinjoins. So he created his own coinjoin implementation with this. I
think he's working with Tony on this too.
Yes, Tony's working on this as well.
I was a little bit distracted because I said episode 70, which Tony was also on, and we also talked about Lightning privacy, but it was episode 69. Nice.
Nice. Yeah, so if you want to check out Vortex, LNvortex.com, it's the first Taproot-enabled collaborative transaction project. Taproot lays the foundation for a new era of privacy and fungibility in Bitcoin. Vortex takes one of the first steps in this direction and aims to be on the forefront of this new era. So,
Do they have
again,
a release yet? Can we run it?
I don't think it's released yet. I think they're, at least as of last week, it was not.
And
But
then Tony has another privacy Lightning wallet called Mutiny
Mutiny,
with you, um, that I guess doesn't have the on-chain component that Vortex has. Vortex has it's like coin join into a Lightning
yeah,
experience.
Mutiny's send only right now.
Yeah, because he's like you can't receive privately on Lightning, so we're just going to disable receives,
Yeah.
which
So,
tells you all you need to know, freaks.
yeah. So again, we're talking about a lot of these problems. These problems are definitely heavy, definitely unnerving, but it's important to highlight people working on the solutions too. Tony and Ben being at the forefront of trying to provide Bitcoiners with the tools that will allow them to transact privately. So shout out to those two. Ben, I won't shoot you for at least a couple months for Vortex.
I mean, I'm going to get a lot of shit for this uh, because Bitcoiners have hard opinions and I respect it. But I think Fediments will help a lot here too. Um,
I do as
we
well.
we want to see we want to see improvements on the protocol layer, but I think on the app layer, when it comes down to actual end user convenience and privacy, Fediments will help a lot. Now, obviously, they have the main trade off of being custodial, but it's federated custodial. So it's a multi sig custodian. It reduces the custodial risk over a single sig custodian like Wallet of Satoshi or Blue Wallet. Blue Wallet and Lightning, not on chain. On chain is self custody. But I think it will help, at least in the short to medium term.
I do as well. Moving on though, I've got to get to Houston. Got the Houston Bitcoin meetup tonight. If you're watching live and you're in the area, it's going to be a good one. We'll probably discuss the fact that Joe Biden wants to make it easier to seize Bitcoin. The Biden administration.
Specifically without criminal charges.
Yes. So there was a report by the U.S. Attorney General that came out, and buried on page 61 of that report, the Biden administration called for dramatic expansion in the federal government's ability to seize and keep cryptocurrency if enacted. The proposed changes will bolster both criminal forfeiture, which requires a conviction to permanently confiscate property, as well as civil forfeiture, which doesn't require a conviction or even criminal charges to be filed. So,
Or a judge.
or a judge, yeah, just a
Like
cop's
the law
discretion.
enforcement agency can just choose to take, whether that's a local law enforcement agency or federal enforcement agency, they can just choose to seize your assets. Now, up until this point, there's been a limit of up to $500,000 before they need to go for judge approval. This proposal would remove that limit, particularly where it relates to Bitcoin and quote unquote crypto. So this is not Bitcoin only. This is all the shit coins as well and your NFTs. With civil forfeiture, we've obviously seen the most common is some guys traveling with cash and a cop will just seize the cash and there won't be any criminal charges. And then you have to go through this whole bureaucratic process to hope to get it back. They'll seize your car. They'll seize any kind of assets you have on you at that time of arrest. But you could see, obviously Bitcoin is seizure resistant. You need to have the private keys. You need to have those secret backup words, commonly called seed phrases, to take it, or a hardware wallet that you know the PIN to or doesn't have a secure element so you can break into. But the first step there is obviously on the legal side, to make sure that their rules allow them to be as tyrannical as possible against you. And then the rest comes down to whether or not you are actually operating with decent operational security, and how much leverage they have over you in terms of gun to your head to get you to hand over things. So I would just want to push back once again. on people that say Bitcoin is unconfiscatable. It's confiscation resistant. Ultimately, our meat, our own human existence is our vulnerability there. So people say $5 wrench attacks. First of all, wrenches are way more expensive than $5 now because of inflation. But that includes a gun to your head that says that you're going to go to jail, that you're going to lose all your other assets, all this other stuff to compel you to hand over those keys.
Do you feel free, freaks? Do you feel free?
Marty, do we even live in a free country anymore?
No, fuck no, we don't. We haven't for a while. I mean, it's insane. The whole concept of civil asset forfeiture is utterly insane. It's un-American. It's evil. It's corrupt. Because, like you mentioned, the cost to prove that you weren't doing anything illegal with your funds to get them back is, in a lot of these cases, more than what you would be getting back. So it just disincentivizes people to even go through the legal process to get their assets back. And now they're bringing it to Bitcoin and crypto, where if they're taking millions of dollars, maybe it is worth going to the legal trouble to get your funds back. But still, it'll be a significant cost that you'll have to incur.
It's under the founding of this nation, it's supposed to be innocent until proven guilty. And with civil asset forfeiture, it's guilty until proven innocent. It's a reversal of that. And it's absolute fucking bullshit that it's a thing, and it's a massive thing. Like, and you want to go back to incentives, like small law enforcement agencies, local police and stuff, like a massive portion of their revenue is just taking money from people, just stealing their money and their assets, their cars and and just selling them at auction and whatnot.
Yeah, it's very interesting that the Biden administration would do this, because the public sentiment around civil asset forfeiture has significantly degraded over time. And I believe civil asset forfeiture revenues have fallen significantly due to public outcry in recent years. And so I guess if there's anything we can do as Bitcoiners or just American citizens generally, it's just continue beating the drum of civil asset forfeiture being utterly insane and evil. And hopefully the political pressure from the public to make it uncouth to go and seize people's assets can keep that trend going in the right direction. But this is
not optimistic on that one.
Yeah.
At least until after Mandibles ends.
Yeah. So, I mean,
post Mandibles era.
What kind of signal is this then? It's buried 61 pages in. It's only a report. Nothing's been written into law yet. However, it does highlight that the U.S. government is a bit desperate. They're getting despotic, kleptocratic, and just setting the stage to go and seize all of your assets. So
I will say huge shout out to the abysmal, horrible news organization that is Forbes for bringing this to everybody's attention, because no one else was reporting on this shit until this article came out.
Yeah. Shout out Forbes. Yeah, not even. Also,
fuck you.
Yeah, it's fucked, man. It's fucked. Moving on. We've got software updates. Before we go to that, we will read our one shout out of the week. So make sure it's only one. Yep. The Detroit, Michigan meetup would like to apologize to the mid-Michigan Bitcoiners. We realize we're letting down the Michigan meetup scene. We will do our best to step up to the plate and make this the state, the Midwest, this country, and this network proud. This is poorly worded, but just remember that the Motor City was built with steel, V8s, and gasoline. We will represent Bitcoin with the same grit and toughness that embodies this great city. There truly is something incredible happening here in Michigan, and we're excited to be a part of it. The Midwest is making its mark. The grassroots movements that are so critical to Bitcoin's success are as strong here as any place in the country. Together, we will win. Let's fucking go.
Huge.
Shout out to the Detroit, Michigan Bitcoiners. You heard the call and you're stepping your game up. That's all we can ask for.
I love. I mean, the freaks know. I love this grassroots Bitcoin movement. Let's fucking go.
Let's keep it going.
Cheers to you.
It's the only way we're going to win.
And specifically, like, align yourself with the other meetups in the region. Work together.
Yeah. And Michigan boy,
Rising tide lifts all boats.
Michigan Bitcoiners, it seems like you guys have a good opportunity to oust your tyrannical governor. I've been following that loosely. She's lying. They closed the schools for longer than 3 months. And the woman she's running against is pretty sharp. So opportunity to get away from a tyrannical governor, it seems. Moving on to software updates. Sparrow Wallet version 1.7.0 has been released. It's a pretty big update, isn't it?
Massive update.
Yes.
Craig Raw is an absolute machine. Bringing respect back to the Craig name. Love to see it.
Yes. What here specifically? Because you can toggle between ClearNet and Tor.
Well, he added Raspberry 64-bit support. So now you can run Sparrow on a Raspberry. And that might not sound that appealing. It's a desktop wallet with a GUI, a graphical user interface. It's GUI. Why would I want to run that on a Raspberry? Well, he launched Sparrow Terminal, which has all the functionality of Sparrow, but runs in the command line. And it has like this beautiful command line interface that looks very similar to the awesome Sparrow interface that people are used to. So you can run that 24/7. It's really useful in Whirlpool where you want to run it 24/7, but maybe you don't want to run it on your desktop computer, full computer. You want to run it on a small, low power machine. So he released a full terminal app that you can either download separately, or you can just run with a command to launch regular Sparrow and it'll run the slimmed down terminal version. So that's a massive improvement. He also added the cancel feature that is in Blue Wallet. I don't know if any other wallets support it, but it's basically RBF with a nice bit of makeup on front of it. So replaced by fee is when you have a replaced by fee transaction, you can update the fee. You can also change where it's going. So you basically just send it back to yourself is what a cancel transaction would be. So he added that feature too. And added a bunch of other stuff. If you're watching the video, you can see there's a ton of release notes here. But those are the two big things that I would pull out.
Should I read all of them?
Yeah, go for it. I know you're time constrained, but we would love a good show note read, good release note read.
Okay, you reminded me. I'm time constrained. We'll move on. But since you mentioned RBF replaced by fee, I'm not sure if you freaks are tuned in to the Bitcoin Dev mailing list, but that's been a hot topic on the mailing list for about a month. RBF is going to be standard out of the box in Bitcoin Core after the next major release, and that's causing a bit of controversy for wallets and services like Moon and Bitrefill, specifically because they accept zero conf transactions, and making RBF standard out of the box messes up that model for them. So there's very interesting debates going on the mailing list right now if you want to check them out. Moon mentioned it's going to significantly hinder their service, which 100,000 plus users are using, which is incredible to see. But there's Moon and Bitrefill have been in the mud on this RBF conversation for about a month.
If you send an RBF transaction, it's obvious. So if someone is running a service or a tool that relies on UX-wise, relies on basically risk assessing unconfirmed transactions, they include whether or not RBF is signaled in that risk assessment. So someone like Bitrefill, they've talked about this at length because they accept zero confirmed transactions. The transaction is still in everyone's mempools. They're not actually in the chain yet. They do a risk assessment. They're like, okay, you're sending $40. You use this fee. This is the current fee market. You're not signaling RBF. We assume you're not going to double spend us. A double spend is when you send conflicting payments and you try and trick the receiver into thinking you're sending them Bitcoin, and then you send it to a different address, usually yourself. So this only becomes an issue for them if most are signaling RBF. You have to assume most people are not using the core Bitcoin core wallet. So it would become more of an issue if there's wider agreement on that. Now the counter argument is, regardless if you make it the default, you can still double spend an unconfirmed transaction. Now a lot of wallets do not have that built in. But if you know what you're doing, you can do a double spend. So the argument is you should assume that until something's confirmed, it can and will be double spent, would be the counter argument there.
Yes, and actually there's two counter arguments. The other being that this has been a choreographed change for many years now. And the core developers have been basically beating the drum like, hey, this change is coming, this change is coming. Make sure you adapt to this change before it comes. And it seems that Moon and Bitrefill sort of just brushed it under the rug, and now that it's here, they're beginning to freak out.
I mean, Moon in general is not set up for a high sustained fee market, and they know that. They're working on Moon 2.0, which will change their model. Essentially, the way you can look at it is every Moon transaction, regardless of Lightning, has an on-chain footprint, and as a result has an on-chain fee. So if there's a sustained high fee market, you don't get the cost savings that you get from a traditional Lightning transaction. I guess the main counter argument for pro RBF is that in a sustained high fee market, in a high fee market in general, it allows the market to be more efficient. It allows people to easily maybe choose a low fee, and then if in a couple of days it still hasn't confirmed, bump that fee very easily. It makes that UX much simpler to the user, and it allows them to be more efficient market participants because they don't necessarily have to say when they're doing their transaction like, oh, I'm going to pick a high fee to make sure I get into the next block, which results in essentially higher fees than usual across the network because people overpay to be assured they're in the next block or the next 5 blocks or 6 blocks. And we saw that happen when I lost my cool in 2019, and a bunch of people opened Lightning channels, as we talked about earlier, in that it's basically becomes a bit of a self-fulfilling prophecy, right? Where people keep outbidding each other because if you bid, like, let's say the prevailing rate for next block is 12 sats per byte, and we saw this happen, you bid like 8 or 7 because you're like, I'll get it in like 6 blocks or 8 blocks or 10 blocks or something, and then the fee market just takes off and just keeps going up and you don't get confirmed. So RBF allows you to easily bump that fee and be a more efficient market participant.
Yes. And RBF replaces child pays for parent, or it doesn't replace it. It's what many would describe as a better alternative to that model.
It is an alternative, right? So like
Yes.
without RBF, if you don't have an RBF payment, and let's go through the same exact example. It's you see 10 sats, you go to mempool.space, or maybe you go to your own self-hosted mempool, and you see the prevailing free rate is 10 sats per byte. Go in the next block, you pay 8 sats per byte, you get some change, right? When you send a Bitcoin payment, it's really a bunch of UTXOs. You have the inputs and the outputs. The outputs usually in a traditional Bitcoin transaction, there'll be 2 outputs. There'll be one, well, there's one paying the miner fee, so 3, but you're paying the miner fee, then you have the output that's going to the receiver, and then you have the output that's going to the change, going back to yourself, to that wallet. If you take that change that's unconfirmed and then spend again, the child of the transaction, hence child pays for parent, you can do a high fee on that, and the combined fee is collected by the miner, so it'll boost it and get you a sooner confirmation into the chain.
Yes.
Like one of the few times where a child actually pays for his parent. So they're old.
The RBF is much cleaner, though, I would argue.
Well, that requires 2 transactions instead of 1 transaction at its core.
Mm-hmm. So be aware. Very interesting debates. Yeah, the Moon Wallet team, Dario from Moon Wallet sent an email to the mailing list. Was like, hey, I get what you guys are doing, but this is seriously going to fuck up our service. So, but again, they have been warned for years. So It's interesting part of these open source systems. Moving on. Oh, another thing that you don't have on the update list. I don't know if it's been pushed or merged, but it's been teased, which is stealth mode in Samurai, which allows you to...
It's not pushed yet.
Has not been pushed, but they're bringing it back. They had it before, but it will allow you to basically create a secret path to your Samurai wallet using another app on your phone, like a calculator, and you just click something like the equal button 5 times, and it takes you to Samurai, which is pretty cool.
Yeah, like the icon on your home screen, instead of being Samurai Wallet, is a calculator. They have a couple other options. But like for the calculator one, you click the calculator, and then it's just a normal calculator app. But if you press equal 5 times, then it opens the wallet. So if you're going through a border or someone gets your phone, they might not easily see that you have a Bitcoin wallet on your phone. Nice practical feature. But that is not out yet. This is not released. They teased it.
Yes. What has been released is Alby version 1.18.0. This adds Nostr in the Alby extension, which is interesting. There's a Nostr November, too. A lot of the Nostr enthusiast.
Love to see the momentum on Nostr. Shout out to all the people contributing to that project.
Yeah, so if you see some of your favorite Nostr enthusiasts not posting to Twitter in November, it's because they're only posting via Nostr on apps like Damus. So be aware of that. These people aren't disappearing. They're just going into the Nostrverse.
And just a quick reminder, Nostr is essentially an open messaging protocol that can be used for a bunch of different things, including Twitter-esque services. And the main integration that Alby has is Nostr's identities instead of a username is a public key private key pair, and Alby's an extension in your browser, as we've talked about in the past. Alby can generate and hold that public key private key pair, so they can hold your Nostr identity for you.
Yes. Moving along. Launched this week, Kollider Exchange and synthetic stablecoins officially launched. It's a pretty cool service. We have Miles from the Kollider team. He's here in the Commons, and I've had this product demoed to me, and it's really clean. It's similar to LN markets on the derivative side, where you can use the Lightning Network to trade with leverage the Bitcoin price. If you're into that thing, I would consider that gambling, and would not recommend it if you're not a seasoned trader. However, this derivatives engine allows them to create positions that allow them to create the synthetic dollar exposure using Bitcoin over the Lightning Network. So you can put Bitcoin in Kollider and then say, hey, I want $5 worth of stable value. And then you go to the Kollider wallet that they have. You move your sats into the synthetic dollar position, and they take a commensurate position on their exchange. So
on the short side.
On the short side. So you can use sats to get a synthetic stablecoin, essentially.
Yeah, so you have like there's 2 products here. There's a Lightning enabled exchange with Lightning deposits and withdrawals. That's all based in the web browser. And then there's a wallet that uses that Lightning exchange to give you a synthetic dollar, euro exposure, whatever exposure that they would decide to support, by essentially going short Bitcoin against whatever that asset is automatically. And then right now it's no KYC. That's really, that's going to be, I assume they're going to add KYC at some point, particularly based on who their investors are. But also because as these services get bigger and more popular, they end up adding KYC because they have more to lose and they have regulator retention. But right now there's no KYC, so it's a very friction-free experience in terms of Lightning. You can deposit instantly and lose your money quicker than you can bat an eye, because you have Lightning deposits on a leveraged exchange. But really cool project in general. And the synthetic stuff is kind of similar to what Galoy's model is in terms of their project called StableSats.
Yeah. Yes, so StableSats Galoy, they're leveraging OKEx to make this synthetic dollar position for them. difference with Kollider is Collider's built their own exchange to make those positions themselves.
And something like Kollider could actually be used with Galoy's protocol. And another key aspect here, which will probably allow them to resist KYC for longer, is as a result of using these synthetic positions, it is a truly Bitcoin only exchange. They don't have to have bank accounts. They don't have to have corporate bank accounts. They don't have to have bank accounts, fiat accounts for their users. Everything is based in Bitcoin at the end of the day.
Yes.
And but also stack sats.
I think we should mention, I believe this product is only available in the UK right now.
Oh, is that the case?
I think so.
Because I was hopping on my VPN, just kept saying a prohibited IP address, but it wouldn't tell me which ones were prohibited and which ones weren't.
I think it's UK only.
That's odd.
I mean, Constantine, the founder, he's from the UK. I think the business is domiciled.
But is KYC free in the UK?
As of right now.
I mean, the UK has some of the strictest laws on this stuff out of anywhere. I assume like you had to use it in like, I don't know, Slovenia or something.
Yeah.
I switched between like 3 different VPNs. I know it's banned in Canada. It's obviously banned in the United States.
Yes. It'll be interesting to see how this develops. Particularly, I mean, obviously we don't encourage anybody to trade Bitcoin on leverage. However, there are trading shops that do this, and that's how they make their money. They're professionals. They know what they're doing and actually know how to manage risk and try to take advantage of price discrepancies.
3 Hours Capital.
They were more like venture. They weren't really.
I mean, they got wrecked on leverage.
Yeah, and Luna.
Yeah.
But compared to something like BitMEX, the fact that Kollider and something like LN Markets leverages Lightning Network, where you have instant settlement, you don't have to wait for Monday at 7 a.m. Eastern for payouts. You can just pay in and out automatically. It'll be interesting to see how Kollider fits into an arb trade strategy if other exchanges like Bitfinex have Lightning, and who knows what other exchanges will add it, what that does to overall liquidity across these different exchanges. If you're a trading nerd, you can see it. I can certainly see the case being made that'll help overall liquidity, and maybe over time suppress any price arbitrage, that exists globally across the world. So shout out to the Kollider team for launching. Will be interesting to see how the exchange develops, and then what type of what's the word I'm looking for? What type of adoption the synthetic dollar stuff gets. Like, does the synthetic dollar product that Kollider and Galoy are providing, does that overtake stablecoins at some point in the future? We shall see.
I don't expect it to.
This was,
and the other thing is, other thing, just quick to note, is FTX's venture arm, Alameda Ventures, which is technically quote unquote distinct from FTX, invested in this. So maybe that means, I don't know if that matters to anyone, but maybe that means FTX is thinking about adding Lightning support.
He's a spook.
But they're obviously, I mean, a lot of people have speculated that SBF and FTX are bearish on Bitcoin and Lightning, but they're at least hedging their bets with this, because this is a Bitcoin only Lightning platform.
Yeah. I mean, I've met Miles and Constantine. Constantine's the founder. Miles recently joined them, and they're really sharp guys. Constantine has a derivatives trading background, so it'll be interesting to see, is this the next BitMEX? Who knows? It's domiciled in the UK, probably not, but really cool product nonetheless. Moving on. This was fascinating news of the week. 2 Chinese intelligence officers charged with obstruction of justice and scheme to bribe a U.S. government employee and steal documents related to the federal prosecution of a People's Republic of China-based company. So
Huawei. It was Huawei.
It was a Huawei. They didn't mention it outright.
But it was pretty apparent afterwards that it was Huawei.
Yeah, so the defendants paid $61,000 in Bitcoin bribes to a double agent under the control of the FBI to obtain internal files and other non-public information related to the ongoing investigation and prosecution of Huawei.
Yeah, so there's a couple of things to unpack.
Not a very good bribe.
Yeah, I mean, well, he's a double agent, so he wasn't actually asking top dollar, first of all, for all the Twitter takes that were like, "Oh, wow, you can bribe someone for." I think at the time Bitcoin was a higher price, so like for like half a Bitcoin or whatever it was. I mean, multiple payments. $61,000 would have been never a half a Bitcoin in our lifetime so far. But like he was a double agent, so he obviously accepted a lower price than I would expect otherwise. I would hope that most traders would require more money. There's a couple of things to unpack here. First of all, Chinese intelligence officials are working on the behalf of Huawei, which shouldn't be a surprise to anyone because pretty much all of those companies are state-operated companies. But China constantly pretends that Huawei is independent and we should allow them to build out our infrastructure around the world, critical infrastructure, because they're not related to the Chinese government. So, I mean, this kind of puts that to rest. And then the second thing is obviously that they paid with Bitcoin. I do wonder, we've been speculating for a while about false flags, Bitcoin related false flags with terrorism and stuff. I mean, this is awfully convenient to have the informant get paid or the double agent get paid in Bitcoin. I wonder if he requested it. I mean, obviously Bitcoin is uniquely suited for this type of transaction. But it does a bit feel like a Bitcoin hit piece.
Yeah, it's a very cheap hit piece too.
Especially since one of the chain surveillance firms came out right afterwards and said that they used Wasabi CoinJoin to make the payment.
Yes.
So it's like a double whammy. It's like, oh, they used Bitcoin and they used a Bitcoin privacy tool to make the payment.
Yeah.
So
I think if you're going to pay a bribe and it's only $61,000, it's almost too good to be true for this type of information.
Right? They should have been like, that's it.
That's it. I'm gonna go find another source. This isn't expensive enough. Yeah. And Wasabi, what tripped them up on that? These guys.
So it's not that they unwound Wasabi CoinJoins or anything. It's like we've said many times in the past, if you use CoinJoin, it's very apparent. And if you use Wasabi CoinJoin, it's extra apparent because there's these very large CoinJoin transactions on chain, right? So you see many, many inputs and many, many outputs. It's a very distinct footprint on chain. So they know for a fact they used Wasabi. Elliptic isn't claiming that they unwound the Wasabi and they know what the inputs were before they used the collaborative transactions, but they know Wasabi was used, and it just really feels like a 1-2. Enemies of the state are using Bitcoin, and enemies of the state are specifically using Bitcoin privacy tools. Right?
Yes. A narrative attack is looming. Yeah. It's been looming.
Expect more of this.
Yes. Be aware. Moving along, there's a new British Prime Minister, and he likes CBDCs. Rishi Sunak. It's very odd how this all happened. So there's many things here. Obviously, Liz Truss stepped in as Prime Minister. She was Prime Minister for 44 days before being basically publicly pressured to resign, and within a week, this dude, Rishi Sunak, former Goldman, he's worth like 700 million pounds or something like that, was just thrust into the position of Prime Minister. And as Matt highlighted earlier this week, he's been a very vocal advocate for CBDCs. We'll roll the tape. It's a 3-minute clip, so bear with us, freaks.
Today, I'm proud to say that under the UK's presidency, the group of the world's 7 most advanced economies, the G7, is launching a set of public policy principles for retail central bank digital currencies, CBDCs. Central bank digital currencies could be a digital version of money, a bit like a digital banknote that could be used alongside physical notes and coins. Unlike most of the digital money people use daily today, it would be issued directly by a central bank, like the Bank of England in the UK. And governments and central banks across the world are working together, looking into what having a digital currency might mean in practice. This includes issues that people care about, such as ensuring users' money would be safe and secure, that it could work with other ways to pay, would be energy efficient and available to everyone. A potential CBDC could offer businesses and consumers new ways to pay in the future. It's all part of the wider story of digital innovation that has delivered benefits to millions around the world and in the UK. The decision on whether to launch a central bank digital currency is for each country to make, and no G7 jurisdiction has yet made that choice. These decisions raise important questions about the reshaping of our economy, financial systems, and the way in which people interact with money and payments. That's why working together and careful evaluation with our international partners is essential. In the UK earlier this year, I announced a new joint task force between the Treasury and the Bank of England to look into a potential CBDC as a complement to cash and bank deposits. We're also hearing from firms, technology experts and others. Under the leadership of the UK, this report today will help support and inform exploration of CBDCs in the G7 and beyond. With these principles, the G7 is leading an important step change in the global policy conversation. The report covers a range of important matters, such as financial stability, cyber resilience, energy efficiency, privacy, inclusion, and tackling illicit finance. These factors should all be considered when designing and potentially delivering a CBDC that would be fit for the future. Our shared objective is to ensure that CBDCs would be grounded in long-standing commitments to transparency, the rule of law, and sound economic governance. The G7 will continue its work in this important area, working with others to enhance understanding and use of these principles. We're excited to be taking a leading role with G7 members in publishing this exploratory work, bringing money and finance into the 21st century.
Woo, what a fucking robot. So there's many things here. You ready for a Marty Jones rant?
Well, before the Marty Jones rant, the TLDR is that he wants total control and surveillance of money. Continue.
Yes. Not only that, very interesting connections here. He's a WEF puppet. I think he's one of the young global leaders at the World Economic Forum. His father-in-law is the chairman of a company called Infosys, which is working on building this CBDC technology that I was mentioning in that 3-minute rant that was very robotic. And the other thing interesting, like towards the end of that, I forget when that was recorded and published, but he mentioned
11 months ago.
But he mentions that there's coordination among G7 countries to bring this to the fore, which isn't exactly true. And this gets back to the intercabal squabble theory, which it's very interesting that all this happened just in the days after I posted that episode with Tom Luongo, which puts forth the thesis that there's an intercabal squabble going on between the Fed acting on behalf of the commercial banks and the Davos crew, which is using the European banking system as their proxy in this war in the intercabal squabble.
Stop trying to make fetch a thing, Marty.
And it's happening, bro. It's happening. It is a thing already. I've seen it's got legs of its own. There's people I've never met before talking about it. So, however, in that episode with Tom, he mentioned that the Bank of England's actions a few weeks ago, at the beginning of this month, was a coup to oust Liz Truss. At that point, when we recorded, Liz Truss had not resigned yet. She resigned a few days later, and he mentioned that they're going to try and get like a WEF stooge in there. Enter Rishi Sunak, who's a WEF stooge. Going back to his comments about G7 countries working together to bring this to the fore, it's not true. Here in the United States, they're going to need coordination between central banks, and our central bank, the Federal Reserve, has had many members, most importantly, Jerome Powell, the chairman, and Neil Kashkari, who's one of the most respected Fed governors out of the Minneapolis Federal Reserve, both come out against CBDCs pretty ardently. And so what he said wasn't, maybe it was true 11 months ago, but at least here in the U.S. at the Federal Reserve, their tenor around CBDCs has shifted against it. They don't want them, and they're saying this publicly. So
Marty's telling you the Fed will save you.
No, the Fed's not going to save us, but there is these things can be mutually exclusive. You can recognize that the Fed is evil, but they're also engaged in this battle against CBDCs because the commercial banks want to control your financial system.
Once again, I will say that's bullshit semantics and does not matter in practice.
Yes, it does. Especially when you have Bitcoin, because you can just opt out of all of it and you can watch them.
No, it doesn't matter. It doesn't matter because if the semantic argument is that they don't want the central bank to directly control the surveillance money, like they're just going to have someone else in the oligarchy control it. That doesn't, like, in practice for the end user, like, it doesn't fucking matter.
Agreed. But we have Bitcoin. So it doesn't matter at all because everybody's just going to use Bitcoin.
But I would say the common denominator between all these politicians and all
they want control.
Is they want control and surveillance of money.
I said that.
Yeah.
I said that. I'm just describing the scenario, the situation, what's going on, the squabble. So the actions of the last week, Truss resigning, this stooge getting thrust to prime minister. He was the chancellor of the exchequer before this, which is one of the most powerful positions in the British government hierarchy, political hierarchy. And again, another thing Tom said was they're going to try and replace her with somebody who will push them back towards the European Union, which this guy is pretty gung-ho about as well. So again, it's just a thesis. We don't know for sure if it's true, but the actions of the last week, again, put some tick marks in the checkbox of this may be an intricable squabble. He's shaking his head. He's shaking his head for those not watching.
Useless semantics.
Why is it useless? They all want control. I will cede that, obviously. I just think it's fascinating that you have this power struggle.
They invented a fucking term called CBDCs, and I do not give a shit about the technical differences between actual implementation and result. It's a fucking marketing term in the first place.
I know, but
it's like blockchain, crypto bullshit.
Agreed. Again, but take all that out. I completely agree. The end result of either of these two sides winning is the same. You have digital enslavement, essentially. However, the fact that there is this power struggle at that layer, if there is a power struggle at that layer, means that there's not consensus at that layer, which gives us as Bitcoiners an opportunity to take advantage of that strife.
But how is that any different than how it's always been?
Because if they don't have coordinated,
like why don't Europe?
It just makes it messier for them to implement what they eventually want to implement, which is good for us because if anything, it gives us more time.
Yeah, but everyone just wants you to use their own cuck money. But that's always been the case.
I don't know.
There's a reason why European countries use the euro and not the dollar.
Yeah, because they're cucked.
Because they want you to use their cuck money. They don't want you to use America's cuck money. And there's a reason why America uses the dollar, not the euro. It's because they want you to use their cuck money, not the European cuck money.
I'm not disagreeing with any of this. I just think the friction at that layer seems to be very high, which gives us an opportunity. Let them fight it out and bruise each other. Hopefully one of them wins and it's just a Pyrrhic victory where they've completely delegitimized themselves and made themselves look stupid, which is what I think maybe is a potential scenario that plays out, is that they have this giant battle, an integral squabble, if you will, and it ends up being a Pyrrhic victory for whoever wins. Because everybody points to them like, you're all crazy. That's the other thing. I mean, I wrote a newsletter about this last night, and that's the silver lining of this whole issue. Like Rishi Sunak specifically, and then here in the United States, these people are so obviously detached from reality, and it's becoming more and more obvious by the day, that it's impossible to like watch them speak and not have like a visceral reaction and just become naturally disgusted because they are not humans at the end of the day. I mean, did you see that Fetterman Dr. Oz debate? That was disgusting that they rolled Fetterman out there post-stroke to basically glitch out time and time again. And that just highlights that the Democratic Party.
Referring to.
Yeah, it's a Pennsylvania gubernatorial debate. John Fetterman had a stroke earlier this year, and the Democratic Party is trying to like brute force him through as government, and he's very obviously.
I had no idea who Fetterman was. I think I know you're talking about Dr. Oz as like the TV personality. Right?
Yeah, he's running for governor of Pennsylvania.
Dr. Oz is running for governor of Pennsylvania?
Yes, and it looks like now he's probably going to win.
I'm so proud of myself for having no idea that was happening.
I'm proud of you too, because it's been. I don't know. The point I'm trying to make is that.
You still do the TV show?
No, I don't think so. I don't think he has been doing the TV show.
Okay.
But yeah, the point I'm trying to make is that the power structure.
He looked like a robot. He looked like a robot when he gave. And
he looked like a sad, broken man, and like he was essentially being forced. Like he's just a proxy for
like the Roger Ver video.
He's like Joe Biden essentially. It's like Joe Biden, but like worse. It's like more obvious with this Fetterman dude that they're just trying to brute force him to have a Democrat as governor and then use him as a proxy to do what they want in the state of Pennsylvania.
I can't believe Dr. Oz is running for governor. I had no idea.
Yeah.
Okay.
It's going to be Governor Oz to you soon, sir.
Governor, not my governor.
I mean, I'm a Texan right now, but he'll be the governor of my parents and a lot of my family members. All right, I gotta get going here soon. We've got 2 more topics, then we'll get to our boost of the week. MakerDAO deposits $1.6 billion in the Coinbase to hold their reserves. This is hilarious. So they had a vote. They had a DAO vote on this, right?
There's just so many layers to this. Is just a straight clown world post that I just thought was funny, so I put it in. I mean, so if you're a Bitcoiner that doesn't know what MakerDAO is, Maker is this idea of having a DAO stands for decentralized autonomous organization that creates a stable coin, a dollar that is backed. Well, originally it was supposed to be backed by ETH and smart contracts, so you don't actually have stablecoin deposits in a bank like Tether. Where it's like literally like US dollars, treasuries, bonds, like different assets are backing the dollar amounts in Tether, or allegedly backing, that's what they claim, or something like USDC. So Maker attempted to create this algorithmic stablecoin, by their words, that was disconnected from the traditional financial system. Now, since then, they've had more and more USDC deposits, which is obviously a completely centralized stablecoin run by Circle and their backers, Goldman and BlackRock and whatnot. So they were already completely eroding on that mission by holding a large amount of USDC. And this is besides all the aspects of the actual DAO governance tokens being controlled, a huge majority being controlled by the founders and venture capital firms that are obviously based in the United States and subject to regulations. So there was this whole bullshit marketing, decentralized stuff. Then it got even worse with USDC as deposits. And now they're taking that USDC and they're actually depositing 1.6 billion of it into Coinbase, a publicly traded, completely regulated, captured organization. That is also part of the USDC consortium. So there's like a bunch of different levels here. I just don't even, this is just blew my mind that this is the timeline, just complete clown world. The whole thing is absolutely crazy. I really don't understand. If you're able to seize those deposits, which obviously the US government can and Coinbase can, or if you're able to take down USDC or make them freeze accounts. We saw USDC immediately froze anything connected to Tornado Cash when the sanctions came out. It would put into jeopardy the whole Maker system. The whole Maker system would be compromised in that situation. And it seems like they realized that they would be compromised. They're like, fuck it, we might as well earn some quote unquote yield on our deposits and give it to Coinbase because we're already fucked anyway. So if you're holding DAI, not only is it not censorship resistant, but it's subject to a bunch of attack surface that maybe these centralized ones aren't necessarily exposed to. The centralized ones, obviously, the centralized entity can fuck you, they can rug pull you, they can exit scam you, they can get shut down. But at least it's relatively clean and simple. While this is just like a bunch of Russian dolls, like those stacking dolls, like just all hiding what is really just extreme risk everywhere in that system.
Yeah, up to this point, it's just been a more buttoned up Lunaterra. That's a good way to describe it.
Yeah. It's pretty crazy. I was so surprised when I saw this. I was just like, oh, you gotta be fucking kidding me.
Dyna, decentralized the name only. These people will LARP, like, look at this, point to MakerDAO. It's like one of the best dApps out there. It's like, well, it's not really decentralized. Correction. Dr. Oz is running for senator of Pennsylvania, not governor. Governor race is Shapiro versus Mastriano. Had a little brain fart there. Sorry, freaks.
I think the freaks will forgive you.
I mean, that shows how.
Thank you for the fact check.
It shows how aware I am of it as well. This is another thing you want to highlight. Binance has over 50% of global trade volume, which this chart would depict, but I think Neil would find his comment.
So first of all, yeah, he said you can't really trust trade volumes because there's a bunch of manipulation that happens. That is true. I will say that the block does have some kind of mechanism that they try and reduce that possibility. Obviously, they can't be perfect with that, but it's illustrative because even if they're off by a significant margin, like this is over 50% is Binance. And the reason I put it in here is, well, first of all, obviously this is global. So the picture is completely different if you look at US trade volume, which is, we're obviously Americans. A lot of the freaks are Americans, but we do have a global audience. I will say the reason I put this in here is because Binance is absolutely dominating in the developing world. The global south, like Africa, Latin America, Asia, they are fucking killing it. And not just with their centralized traditional exchange product, but also with their P2P product, Binance P2P. And if you talk to a lot of people in these countries right away, they're like everyone uses Binance. They're throwing a shit ton of money. They obviously have their own shitcoin. They have their own stable coin. They recently announced that they're going to have, I think they want the Kazakhstan CBDC pilot project to run on their shitcoin chain, Binance Smart Chain. So just something to be on people's radar, like CZ and co over there are quietly killing it, and their incentives aren't necessarily aligned with Bitcoin. Their incentives are obviously to just increase their bottom line and increase their control over global markets. So I spoke to someone who's focused on the developing world, and they were like, the single biggest risk in the developing world to sovereign Bitcoin usage is Binance.
Yeah.
Like, without a doubt, he was like, Binance is it.
Yeah, they entice people into shitcoins, entice people into their custodial wallets. Beware, freaks, especially if you're in the developing world. There should be more products coming to market that are Bitcoin focused. CZ, man. Is he quietly richer than FTX or SBF, whatever the fuck? Probably.
What'd you call him? STX?
FTX. STX is a great lacrosse brand.
Probably.
STX over FTX all day.
He's, Binance has dominated way longer than I expected.
Yeah.
I have there's a tweet out there where it was like, Bittrex had just went from the main bucket shop, and then they added KYC, and then Poloniex back in the day was the Poloniex took over, and then Binance took over, and I was like, it's just, they're going to have their moment in the sun. They're going to have their 8 months, 9 months, and then there's going to be another one that we've never heard of. But Binance has maintained dominance.
Yeah, it was. Yeah, Polo and Bittrex are around the same time. I think Polo may have had like a short period after Bittrex got cucked where they were
Yeah,
go-to.
Polo was like 6 months or 7 months or something. And then there was obviously a bunch of exchanges before that rose to dominance and then fell to irrelevance.
I mean, OK Coin, they had their wood chipper. They got cucked.
Yeah, OK Casino.
Yeah, who else?
I mean, BitMEX happened in a different, time scale kind of across all of those.
MintPal popped up and died.
What was the one with the one that it was based in Florida and then he disappeared?
Vern Cripsy.
Big Vern, yeah.
Vern. Where is Vern? Nobody knows where Vern is. Has anybody found Vern?
Vern's killing it right now, probably.
Big Vern. Yeah, he had this exchange, Cripsy.
Left America.
There was that one out in New Zealand, too. I forget what it was called. I forget what it was called.
There was a bunch.
Big Vern. That's a name I haven't heard of.
History of Bitcoin is littered with exchanges that either exit scammed or went bust or got KYC'd and lost volume as a result.
Yeah. All right. That's all we got for the topics. That was a great rip. Geopolitics, technical details, shortcomings of Lightning, ways to fix it. A lot of Tor discussion. Thank you, freaks, for joining us. Did a little earlier today, this Thursday. You don't know it yet, Matt, but we may have to do it next Friday, next week. If that's okay with you.
Oof.
We'll discuss it.
Oh, well, maybe I can make Friday work. We'll discuss it off air.
We'll discuss it.
Yeah.
I'll keep you posted. On to the Boostagrams.
I could possibly make it work. We'll see. I might have to do it from a hotel if we do it on Friday.
Okay. Or maybe I could do it from a hotel on Thursday.
We'll figure it out.
Boostagrams. Top 4 Boostagrams rabbit hole recap. Rip 223. Minor pain is here. Number 1 from @Gert. 69,000 sats. Nice. Great rip. Full of positive vibes. I'm currently sitting on a Mexican beach with a couple of days before I can get home and update my Lightning node. I sure hope all my channel partners are cool so they don't pilfer my sats. I know they won't. It's a whole bunch of ride or die plebs. Love you guys. Love the freaks. Penis, 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 penis. Had to throw the penises in there. And then he commented on that narrator. The plebs were all honest actors. So he updated his node a few days later.
Same with mine. That one node I hadn't updated yet.
@Pod Resistor. Pod_resistor. Very big in the podcasting 2.0 space. 61,020 sats. Hey, Matt, Marty. Great rip. Quick question on accepting Bitcoin at an unnamed farm store. Today, it's just put some cash into a box. How could the store accept Bitcoin without a person manning the store? A static Bitcoin address could work, but would provide poor privacy. Any suggestions would be great. God bless. And I know you guys have something at the Bitcoin Park. I mean, the IVEX Mercado terminal, you can do that, right? You just self-populate invoices, right?
Yeah, or you could do like a BTC Pay on an iPad, but like someone should...
You're trusting that people are going to actually plug in the right thing.
Well, you have to trust that they pay it, and you have to trust they don't steal the iPad.
That as well.
Or your produce, but I guess there's trust in that situation.
Seems like you're already trusting them anyway with the cash, so...
You could print a QR code that's either a LNURL or a key send payment, but not all wallets support either of those, which is kind of an issue. You can print a PayNim, a BIP47 payment code, but only 2 wallets support that. You could also print a QR code to your web store. And just a URL, just opens it in the browser, and then you can serve them BTC Pay or IVEX. So there's some options there. None of them are really great options on their own. They all have trade-offs.
Yeah.
But yeah.
BTC Pins is saying LNURL QR.
Yeah, but once again, it's like not all Lightning wallets support that. So a lot of them do. I think the cleanest option, unfortunately, is probably if you don't have an iPad with a payment terminal, whether that's like an IBEX, an OpenNode, or a BTC Pay server, is a QR code to a website that has the web interface there. And then they can choose on-chain or Lightning and make a payment.
Yeah. Hope that was helpful, Pod Resistor. Many options to think about. At Eric99, perennial booster. 50,000 sats. Stay humble and stack sats.
Great advice.
And last but not least, we did not have 4 above 50,000 sats this week, but we'll take it. At Mix, 33,333 sats. Bunch of threes across the board.
We appreciate the support, freaks.
No comment on that boost from Mix.
It's pretty cool seeing the fountain leaderboards on the value for value side.
Yeah, we have.
We appreciate your support, freaks. It means a lot.
When next Citadel dispatch? I saw it this week. I was like, what the fuck? You didn't record.
I haven't done a dispatch in a minute. I mean, I've been all over the place. So
we had
but there will be more dispatches coming up. So if you aren't subscribed, open up your favorite podcast app and search Citadel Dispatch and click the subscribe button.
Yeah, subscribe to all of them. RabbitHole Recap, TFTC, Citadel Dispatch.
Subscribe.
Bitcoin Review. What's that? Is that just called Bitcoin Review?
Bitcoin.review.
Bitcoin.review.
The podcast I co-host with MVK.
Yes.
And Justin Moon.
Yes. Yeah, we had 2 in the top 5 this week. RabbitHole Recap in 3rd position, TFTC in 4.
Let's fucking go. Well, we appreciate you, freaks. Thank you for the support. It really does mean a lot.
Yes, it does. Yeah, if you guys...
Marty, how long's your drive?
Depends on traffic. Probably be 3 hours. I gotta get moving.
Fair enough. This is a great rip.
It really was. They're only getting better. We got the start of the World Series this weekend. Let's go Phils. I'm going to go to Houston with my Phillies hat on and troll a bunch of people.
I think sometimes they're getting better and sometimes they're getting worse. Like I was looking at an old one. We were just so young, filled with life. Yeah.
Kids, not that kids take the life out of you. They make you all just consistently tired.
I think it's just, I've said this before. I don't know if you can last publicly in Bitcoin for a long period of time without either losing your mind or everything going to your head.
Are you saying that's happening to us?
I'm kind of losing my mind a little bit.
What?
Trying to stay humble.
Should we talk through this? Should we have a struggle session right now?
No. All's good here.
I mean, you just said all wasn't good. You just said you
got to
losing
fight
your
it
mind.
off. You got to fight it off. I mean, I think it's healthy for people to take a step back and just not think about this shit all the time, not argue with strangers online all the fucking time, and we just haven't taken a step back in years. I think that's normal human rest. We just haven't had that human rest. I have zero intention of scamming people or shitcoining or any of that shit, but I mean the threat of burnout is very real. I mean that's part of the reason why there hasn't been dispatches, right?
Yeah, you got to stop traveling, bro. I've told you this.
Yeah, I mean
you commit to too much travel. It's just travel that gets you.
The number one largest mental burden in my professional life is RabbitHole Recap every week for 4+ years.
Yeah.
So I don't want to hear a lecture.
I'm not lecturing you.
My point is we're doing it for the freaks, and I appreciate all your support. It keeps me going.
Yes. Well, if it makes you feel better, I mean, this is one of the highlights of my week. I love sitting down with you and going through these topics. It is a burden, though. Not a burden, it's a labor of love, but it is a concerted effort to be here week in and week out, freaks. So we do it because you guys keep coming back. You seem to be liking it. You're boosting our shit. So, and it's important. Somebody's got to get out there and educate the world on what's going on in this space and how to think through it. Get some rest. I'm going to go to Houston. We'll be back here next week. We'll do business off air to figure out when we're going to record next week.
It'll be either on Thursday or Friday, freaks.
Yes.
And in the meantime, I love you all. Stay humble, stack sats.
Peace and love.